There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
Markets continue to hold higher as investors wait for the European Central Bank statements on Thursday and important U.S. jobs data on Friday. Can the S&P reach all-time highs? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. Futures are modestly higher this morning after stocks posted gains in yesterday's session, and another new high was reached in the Dow and the S&P, and those stocks did close off their highs. What are the levels we should be watching today?
I feel like the same levels we talk about many days.
Right.
This week we came in and said, can we digest above last week's breakout? And we put those levels on the table, and we did a good job doing so. So with that said, as far as the S&P by itself, it's still trending higher. It's still above all different trends. You look here at the chart of the S&P, you will see, you have your gradual trend that started at the November low that hasn't been tested since then, which has some bears very frustrated. Then you have this more intermediate trend line that we've been following. We tested it once. This was during the Italian elections. And then what happened? We actually held it, held higher, then resumed to the upside again. And then this was your whole Cypress scenario where we touched a 21-day and that was it. And now we're just grinding higher. We had a small, really highly accelerated uptrend that broke to the downside. At this particular point, if you want to draw a line from the last breakout that we had above that 1530, we're still following this one. So until that changes, stay with it. Yesterday's high is 1573. We have our historic highs at 1576. So overall, still trending, and not only are we above the gradual trend or the intermediate trend, or up above the active accelerated trend. So until that changes, try and stay the course.
And we were talking before off camera about how this is sort of an investor's rally, not as much a trader's rally. It seems as though traders are still having trouble finding their spots because it's not the usual suspects that are doing the best right now. Do you relate to that at all?
Yeah, well, you don't have high beta tech doing the heavy lifting. Right now you have stocks like Procter & Gamble breaking out. You have Coca-Cola at highs of the year. You have Philip Morris on the move. You have all these big name multinational type companies that are definitely highly, weighted in the S&P that keeps, carrying the move higher, where, the usual names, are just not being, they're not that active. And if they are active, every few days they switch characters, so it's making it a little bit harder. I'm not saying this is an easy environment to make money because, I will say at times it's frustrating for me as well. But there are a lot of opportunities out there from the long and the short side if you just don't have one side on the brain.
And we know that the financials led the rally earlier in the year and have been weaker as of late, but they did catch a bid yesterday. So I guess now the question going into today is if there will be more follow through.
Right, and that's what traders look for. They look for follow through. And if you look, at the XLF, we've been talking about how lethargic the banks have been. But it really perspective. In perspective, they've been lethargic, they've pulled back, they haven't been leading this charge like they did a few times before, which just makes it more comfortable for us because we like trading Goldman, Bank of America, JP Morgan, all those guys. So when they're, pulling off and in retracement mode, it gets us a little off our game. And if you look here at the XLF though, and you look at the size of the move that it's had from these lows, and you want to draw trends here too, this trend is still well intact. This last breakout that we just had above this area, we're still above. You look at the 21-day moving average, still hanging above that, not even at the 50-day. And we have another, symmetrical type triangle here. So I think in order to get this in motion, it might have to be next week when earnings start coming out, because next week we do have a lot of earnings from the financials. Above 1830, it gets back in motion to the upside, and below the 21-day, here you go, fills this gap right into the 50-day. So we're just waiting to see which way it works out, because even though the XLF's above the 21-day, you do have some of the key stocks below their 50-day. So it's just another divergence that traders are dealing with.
Right. We talked in yesterday's morning call about a potential short setup in Goldman, and the stock saw a small gain yesterday, although it still looked pretty lethargic. So what do you make of how to play Goldman here?
I think some guys made some decent money when it broke below 150.50, and then if they've been trying to break it or trade it short from below 144.5, they're a little frustrated. So I think we're at that inflection point again here. You look at Goldman, again, for perspective, look at the move that it had that started since December. This is what people were used to, Goldman trending higher in this ascending channel, but then it changed. Once it broke right here below the 8-day moving average and then sliced through the 21-day, it became more of a chop fest. But all in all, if you look, what has happened here, all you've had is a small retracement after a monster move that started when it ignited here at 121, or when it started the year on this gap. So overall, it's below the 50-day, which is somewhat bearish. Okay, but it is holding this level here. I would say, the longer it stays above 144.60, the higher the chances we could get a trade back in motion if it can clear 149.06. So I think traders are waiting to see if they could actually, play this for a move back to the highs, or does it need to do some more of this sideways action, which definitely chops up some traders.
Right, and then there's Citigroup, which found some support at its 50-day and bounced, but still got that 8 and 21-day lying ahead. What level would you say it needs to get above now?
Well, this one too, just trickling and trickling and trickling. When stocks trickle, people get, it's not going down quick enough for the shorts, and it hasn't found that bottom yet for long. But if you sold Citigroup into the stress test, into the excitement, and you're pretty light Citigroup, you should be excited about this, because I don't think the highs of Citigroup are in for the year either. You look here and you look at the move that Citigroup had. This was the last breakout. Okay, this was the last time it went above the pivot right here and accelerated. And then it did break this upper area right here on this, red potent down day. So if that was your high level stop, as it comes into the 50-day, why not try and buy a dip? Okay, so with that said, maybe nibble. And if you want to draw a little descending channel here, for this to get better, it has a level to clear. This level to clear here is about 45. If we were to clear 45 with some volume, perhaps this corrective activity will be over and it starts getting back in play. But for right now, this red, choppy, small bars is not what traders are used to after, seeing this, huge run that we've had. But overall, Citigroup still remains strong, and it's still in a really nice trend. So overall, all we've had is some corrective action, and buying a dip into a potential trend line could sometimes be more prudent than playing a breakout like when it went above this area. So just know what you're good at here, and I think there's going to be more opportunity into this area.
Now, how these setups compare to, say, Bank of America, which has been having some choppy action, and it's hanging on to that new support level of 1210, but don't know if it'll be able to keep hanging on.
I don't know if 1210 will hold, but if it doesn't, it goes to the 50-day, I think it's viable. It feels like in the last week, the headlines around it got a little bit more negative, just about their mortgage crisis, and I think they have the most complaints against them, this and that. But overall, a move from $8 in August, or what was it, $9.95 breakout, or the $11.60 add-on. If you look here at the chart, it's had a really nice move. Look at the size of this breakout here. Look at this add-on trade here. And then what happened? It went back into corrective mode. You did have a really nice breakout here. For some reason, every time those major analysts come out and talk positively about it, it seems to correct. So here's like a bit of a breakout failure, which could, tell you to lighten up a little bit. But overall, if it does pull into the 50-day, in perspective, look where it came from. Look at this trend, and this trend is still really strong. At this point, I'm still in Bank of America. I'm very light. I'm looking for a reason to add, and right now it hasn't really given me one. If you look closer, you will see if it starts to get above this mini range here, perhaps that would be a signal to buy more. Okay, and that comes in right around this 1228. But if it doesn't get above there and wants to continue, I will be looking very, very close, right around 1189 at the 50-day, to potentially, buy that dip. So I'm fine either way. Sometimes you just have to be more and wait and see, and just you don't get the action you want until something changes.
Then there's AIG, which closed the day up 2% yesterday, managed to close on high. So should this be on our radar for possible continuation today?
This isn't the AIG of a few years back when it would go $10, $15 and it was really thin because, whatever, I can't get into that. That was fun. Right now, it's not as fun, but the market's not as fun. It doesn't have to be. But, there is opportunity here, and it did wake up yesterday. This was the last breakout where it got a little choppy holding it here. Yesterday, you did close in the green, and this is why traders are a little bit, chopped up, because on this day, without yesterday, kind of looked really bad, right? Here's a high, another high, turning lower, and then all of a sudden you get a green day where now all of a sudden it looks good. So it's above the moving averages. If the market wants to continue, Here is your next level to get to. I do think if you're holding positions, this could be one of them. It's acting fine. It's just not showing you any momentum yet, but it's absorbing this big move that we've seen from November, and it looks like a lot of other things just not providing alpha yet.
Similar moves out of BlackRock. Had a good day yesterday, gained nearly 2% and closed on highs as well. So maybe continuation there today is also.
Well, this one has been providing the most leadership out of most of the banks, making new highs, and it's still upper level, and it still has a really nice base here. I'm going to put this on my radar actually, because this could be one of the first banks to make new 2013 highs again. It's got to clear this 259.19. Okay, it's been trending higher for a long time now. So if this were to break above 260 on power, then perhaps it wakes up the other banks that are well off their highs, and you could catch that middle from the pull in to the highs. Right now, this one is something to get some leadership from and to watch. But then also, if the other banks start dragging lower, use this 21-day as your high level stop. So this is definitely something you should look at.
All right, coming up, we're going to go in the trenches with weak names that saw some downside follow through and how you can tactically short them. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
In yesterday's morning call, we talked about the importance of watching the transports and the Russell in case there was downside follow-through from Monday's weakness, and selling in the transports intensified yesterday, giving us opportunity to get involved on the short side. So where might we get opportunity again?
Well, there were two ways to look at this yesterday. One, okay, if these things continue lower, what will it do to the market? Will it drag it down? Or are these things specific where, one day could lead into another day for opportunity? So real quickly, I'm going to do like a tactical lesson on what could have been done yesterday and maybe what we could look at for today, just for clues. Usually we do this in our education classes, but I'll do it right here for the morning call. Okay, if you look at the transports from Monday, go to the chart here, you will see, look at this potent down day. Okay, this was a potent down day on Monday where the S&P did not have anywhere close of that type of day where it took out the low of Thursday and closed there. So yesterday, the futures opened up a little bit. Okay, so the first thing to do was short potentially the weaker sector. So this was yesterday. Boom. Okay, here is your open up a little bit. It held more than 50% of this downside range, and you had some follow through. Okay, so right there, this looks very different than the chart of the S&P. So it shows you that you could short a weaker sector if it shows its face. And this wide range bar compared to, this was 2 days ago. Okay, look at that in the IYT. You take a quick look at the spiders 2 days ago, and you had a down day, but did it take out Thursday? No. Did it close in the dead lows? No. Okay, that would have been down here. So right there, that gives you a sign saying, okay, let's potentially short the transports versus just looking to short everything else. And then there was your follow through. Still above the 50-day, still above this trend line. I would say now if it could stay below this little broken area, potentially it has a move to test this trend line through the 50-day right into this 106 zone. So the longer it stays below this now, the higher the probability it trades through to yesterday's low to continue. But yesterday, for those tactically looking short, this was a spot to be.
And the Russell also got downside follow through yesterday from Monday's weakness. What can we learn from the action we saw yesterday going into today with the Russell?
This was very similar. And for traders, this is again a reason why there's some frustration. If you see the Russell weaker, which is where the growth is, that's telling you growth is hard to find. Maybe that's a leading indicator to the downside. Same way if technology is weaker. But it wasn't, again, because we talked about those multinational big names where money's hiding to keep the S&P going. So if you want it to be more short specific, this too showed its face on Monday. You look here at the chart and you will see that look at the size of this wide range bar and also look at this trend, from the November lows. So this engulfed this entire range right here. So if you had short in the brain and you wanted to be short, I remember this was up by 50, 60 cents. You could have shorted the up move into this and then shorted if it went through Monday's low. Now again, I showed you the chart of the spiders. Look how this engulfed this entire upper range. You go back to the spiders to show the relative weakness. Okay, that was this day. If this was going to match the weakness of the Russell, you would have had a move like this. Boom, okay, to engulf this entire upper range. That is not what we saw in the spider, so it was something different in the Russell. You go back to the Russell, that was this day, and then yesterday it opened up halfway in. You could have shorted the bounce, which I think Laz calls his H play, because you have the pole, then it H and rolls over, and then it closes in the lows. So now the question is, the longer it stays now below this, I would say this area right here, below 93, the higher percentage, I think we see at least, test the 50-day, which comes down to around 91.50 to 91.75. But overall, yesterday, if you were tactically looking for a short because of the weakness in the Russell, it was better to short the Russell than look for other market shorts.
All right, time for some quick hits here. Let's talk Apple, which eked out a tiny gain yesterday, but is this one just not compelling yet enough for you to even be paying attention to?
Yesterday was a wild ride. Goldman Sachs came out and put it off the conviction buy list. Opened down a little bit and then it squeezed up $6, $7. With that said, if you remember, we played Apple from about 440 to above 465. So from 465 down below 430, just pulled in 30 points. So you couldn't just blindly short it. Some people are like, oh, Goldman took it off the conviction buy list, I'm just going to get short. And there's no free lunch out there. So PS, it rallied up $6, $7. And then finally, after probably frustrating every short out there, it pulled in. So if you look here at the chart of Apple, you will see, same Apple, same downtrend, same just non-commitment. Okay, this is the high here. It broke above this level, okay, right around here. Okay, if you remember that trade, right around 440, went above the 50-day and failed. Yesterday, it rallied back up to the moving averages and got rejected. So at this point, you could maybe trade it versus 426.40. That's your micro pivot. And then more of your macro pivot is this 419. So see if it can stay above it. I don't know. I've seen crazier things. Maybe it will. For me, this is on my C list now. Okay, it became an A list right here. Tried to stay with it. Now down here, when it's really choppy, I might day trade it here and there if I see a divergence or a setup. But I don't see anything compelling today for it to be on my A list. It's going to be just, out of the corner of my eye probably.
Gotcha. All right. Well, Nike is still holding above its earnings gap. The stock closed up over 1% yesterday. So what are levels you're watching?
Nike's holding its gap from earnings. I would say take a quick look. If it can get above this yesterday's high, I'll be looking to try and add to it, and that's 59.40. Overall, very healthy. I like when a stock gaps up on earnings, holds it, and then hopefully gets in motion. You just never know how many days it needs to absorb this move. Yesterday it tried to get on the move. Maybe today it continues. Also possibly opportunity in Disney, which closed up nearly 1.4% yesterday and has been looking good. Yep, Disney closed in the highs yesterday when the market actually pulled off. So to me, this is saying this is a candidate for new highs. You take a look at the chart of Disney. It's something that I own also. Closing the highs. Next level here is the 52-week highs of 57.82. YHOO bounced off its 8-day on Monday and gained over 1% on Tuesday. Continuation on Wednesday? We shall see. Right now, I've been long YHOO many times during the course of the last 6 months. I'm actually not in it right now. It's still in my 2013 thesis that we could see 24 to 25-ish. If you look here at the chart, it happened a lot quicker than I would have thought. Last tradable move was right here, if you remember, through that 2150. Then remember, I talked about buying into the 21-day. You could have added here, and I think I sold into this move. Okay, but I never got back in. So for me, I'm just going to let it go. Still looks good. Trend is still strong. And this has been a chosen one so far for 2013. Just trim and trail it. Gotcha. And Facebook met some sellers yesterday afternoon. Could we see more today? You know what? Facebook's interesting because A, it has that Facebook phone event on Thursday, which I don't know why they're getting in the phone business, but that's not my thoughts or any of my concern. I've tried this a few different times. Yesterday I was actually long it. It gapped up. I was like, I'll be long as it holds the gap. I did think that the news today was a little bit bigger than some would have thought. I think the news is that some of these social media companies are cleared to release their news. Doesn't have to go through Dow Jones News, doesn't have to go through Reuters if they say that they might do it through their own social network or whatever. So I think that's a possible revenue stream. Besides, the other day I was actually on Facebook and it was someone's birthday, and I guess I'm a little old school, and I saw that, it said send a gift.
Right, you can
You
do
know?
that now.
Yeah, like it's pretty easy. Like if you forget someone's birthday, you can send them a gift, send them a Starbucks card, send them, a gas card or something, like just on the
Right.
click. And if everyone's so secure using their credit card over the internet on all these other sites, why not Facebook? So with that said, I don't know. It looks like they're trying to make moves to monetize mobile, monetize their user base. At this point, the street doesn't love the stock after the grind lower. If you look here at the chart, I will say if it will end up holding some decent support. Some are calling this a head and shoulders top formation, which it could be, but in order for it to trigger, it's got to clear and close below this neckline. So two things are going to happen. It's either going to clear this descending channel and get back on the groove to the upside, or it's going to break this support and then who knows where it goes from there. So for me, I'm going to watch it closely. In order for me to get back involved, it's going to have to really trade above 26.30 with a lot of volume and potency. If that doesn't happen, I'm just going to stay away. I did try it yesterday, and it just wasn't enough for me to stay with it. So with that said, we'll figure it out from there.
Right. What do you think of macro on Facebook?
Macro on Facebook?
Yeah, big picture. What do you think?
Yeah, I think they're trying to monetize their overall user base. And unfortunately, the investment bankers that brought it public had too many different rounds in the private market that made their valuation very lofty. So, to go public at 38 with, I don't even remember what their valuation was, but it was like 100 billion or whatever it was, versus their sales and their earnings, it's a hard pill for analysts to swallow. So I think that the investment bankers were a little piggy. But as far as their business model, I think that they're trying to get it to be monetized. And if they do, and we see a few earnings quarters where they meet or beat and start to get institutional interest and work through that whole IPO mess, I do think it has a future. But right now, technically, it's not showing a full-fledged buy signal.
All right, I made that one a long
Yes.
hit. We'll move on to GE, which gained over 1% yesterday and has regained the support of its 8, 21, and 50 days. So where's resistance now?
This one I bought yesterday. If you remember on earnings, I bought it. It was a nice move to 52-week highs. Since then, it's been consolidating. Yesterday, it caught my eye because I'm like, why is this market going up and nothing I have is going up? So I was like, let me check out what GE is doing. If you remember last earnings, this is when it was a good buy for me. And then it continued to the upside, and now it's been in this upper level channel. So I said, you know what? I'm going to buy it in this lower area because I know if it was breaking out, I would probably look for momentum. So here's where I bought it. It closed pretty strong. I think it has room if it wants to get back to the highs. And overall, I think it's intact. It held a 50-day, and it's a position to own. It's not a barn-burning trader, but if you want the market to work for you and you believe in higher prices, GE's in the game for that.
And Procter & Gamble got that breakout move you've been looking for yesterday. It's still looking good.
Yep, 2 days out, typically on the third day, it moves from the A list to the B minus list. If you look at the chart, just to show you a chart, because if you get rid of the name Procter & Gamble, and if this happened to have been Baidu, Amazon, Netflix, LinkedIn, every trader in the world would have been excited. But they weren't because it was Procter & Gamble. So from now on, try and look at the chart, remove the name, and if it breaks out and goes, have the same type of enthusiasm with it, because this was a nice trade, and I think some traders did catch it, and we did have it listed on off the charts.
Well, as we've been talking about, it's all about picking your spots out there. What will you be focusing on today?
Same old.
Right.
I think high beta tech's a mixed bag, both long and short. I don't see anything there that I'm gravitating towards. If LinkedIn breaks 171, which I'll just show you real quick, I do think that there could be some pressure here for a cute short. Apple, I don't really have any conviction on, and I have some names on that look like they can go. I'm just going to take it as it comes today. I'm in no rush to do anything. I'm in no rush to be short. I'm in no rush to look for breakouts because I don't see that many. So today's one of those days where, if some trade develops, I'll be with it. I'm going to just manage positions. And if you just manage positions that you like, and when you see a good pattern around your position, you add a tier. When it gets in motion and goes, you take off a tier and then try and stay with the trade. And if the market blaringly changes, then you change your thesis and your composure. But until that happens, sometimes the trend is your friend is a cliche that's boring, but that's what's been going on here.
Let it come to you, right?
Yes.
All right. Well, happy trading, everyone, and have a great Wednesday.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.